Although oil has been standing still for 3 days in a row, it becomes apparent that the quotes are increasingly slipping to $102 per barrel, with almost no further attempts to break through the $105 mark. Apparently, the market is being wound down not only by expectations of the upcoming Fed meeting, but also by growing fears about a looming global recession. It turns out that the focus of the market participants has somewhat shifted. Earlier, investors were deeply concerned about a possible energy crunch. However, they realized that a recession would lead to a drop in consumption, which in turn would offset energy shortages. In the end, traders were left with the expectations of interest rate hikes in the United States. This inevitably leads not only to the dollar's strength against other currencies, but also to a decline in the value of all other assets, including commodities. According to the trading chart, Brent crude oil futures returned to the area of $102 per barrel, in which the quotes had tried to extend the downward cycle 3 times already. Thus, if the price fixes below 101.50 on the forward chart, a bearish trend will continue. And in this case, the quote will most likely fall below the 100 mark. Otherwise, the market may see another price rebound. The shift in the focus of the market participants also affected gold. Fears of a recession forced some investors to flee to traditional safe haven assets. Against this background, gold edged up to the level of $1,725 per troy ounce. At the same time, this upward movement can also be seen as a rebound following a steep drop. In fact, the situation remains unchanged. Interest rate increases by both the US Federal Reserve and the European Central Bank continue to make the yellow metal less attractive. Higher government bond yields result in capital flows from all possible markets to the debt one. Therefore, a rise in the value of gold is clearly temporary. In the medium term, the market is still trading downwards, while the current growth is just a correction. That's why traders still believe that the best way to make a profit is to open short positions, choosing the best levels for increasing the volume. Although Russia's central bank cut its key interest rate by a bigger than expected 1.5 percentage points to 8% on Friday, the ruble barely reacted to the news. The point is that Russian Central Bank Governor Elvira Nabiullina made it clear that the regulator had no intention of extending that regulatory easing in the near future. Against this background, the Russian currency gained strong upside momentum. The only thing that may weaken the ruble now is a change in the budget rule announced by the Ministry of Finance, which will allow the Bank of Russia to start interventions in the foreign exchange market. However, this decision still has to be approved by the government. Most likely, this will happen this week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.